We have clients that are doing hundreds of thousands of dollars a year in Roth conversions in preparation for moving back to Canada. Today, we're going to talk about the four biggest benefits of doing Roth conversions if you're thinking about moving back to Canada. Hi, my name is Brian Haggard. I'm a certified financial planner, chartered financial analyst, and I'm the founder of RetireMitten Financial. We help simplify your cross-border retirement plan. And for a lot of our clients right now, they're thinking about moving back to Canada. A lot of people are reaching out to us about what would it mean or what would it take for them to move back to Canada. And for those people, that means a lot of tax planning. What are things that we can do today to help them make the transition to Canada as seamless and as easy as possible? And for most of them, the biggest benefit, the biggest thing that we can do is help them with Roth conversions before they move back to Canada. Today, we're going to talk a little bit about what are Roth conversions and what are the big benefits of doing of those if you are thinking about moving back to Canada. So let's talk about an overview of Roth conversions. A Roth conversion is moving money from a pre-tax account like a 401k or an IRA into a Roth IRA. And the reason we do that is so that we can then withdraw that money from a Roth account later in life completely tax-free. Now, we do have to pay taxes today on the conversion. If we moved $100,000 from an IRA to a Roth IRA, that would count as $100,000 of income when we do it, but that money will now be in a Roth account. It will now be moving and growing for you completely tax-free for the rest of your life. And you can do a lot of Roth conversions at a relatively low tax rate. If you have no other income, we have some clients that are doing $350,000 a year in Roth conversions and only paying about 20% effective tax rate on that. That's going to be typically much less than what you might pay in Canada. And now that money can go to Canada and you can withdraw that money completely tax free. Now, a couple of caveats with Roth conversions. If you're going to do Roth conversions, we suggest doing it sooner rather than later. If you call us up a day or a month before moving back to Canada, we may be able to do a Roth conversion before you leave, but there's a bigger benefit of trying to do Roth conversions over 2, 3, 4, 5 years prior to leaving for Canada, trying to get as much as you can converted at lower tax rates. The other thing that I'll also just tell you is if you're doing Roth conversions or if you're bringing Roth money over to Canada, we strongly suggest talking to a tax professional. Yes, you can withdraw Roth money in Canada completely tax-free. However, there are some designations that you have to, or declarations that you have to make upon entering Canada when you start filing Canadian tax returns declaring this Roth account. You don't want to miss that and somehow be taxed on this money somewhere down the road. So, what are the biggest benefits of doing Roth conversions? Doing Roth conversions while you're in the US prior to leaving and going up to Canada. And the biggest benefit, which is probably pretty obvious, is it's going to lower the annual taxes that you pay up in Canada. If you withdraw money from your US IRA accounts or 401k accounts and you're a Canadian resident, you still have to include that on your on your Canadian tax return. And here, if you convert that money prior to moving to Canada, you would pay taxes here in the US at your US tax rate. You'd then be able to move that money up to Canada and withdraw it completely tax free. And that could be a huge benefit. As most people know, taxes up in Canada are significantly higher typically than they are here in the US, especially if you live in a state that has low US state taxes on it. So if we can convert a bunch right now here at lower US tax rates, and then move it up to Canada and pay lower taxes up in Canada, that could be a huge savings for you. And that's probably the biggest benefit of doing Roth conversions if you're planning on moving back to Canada. Now, Canada doesn't just tax you on a year by year basis. You also could have significant inheritance or estate taxes when you pass away in Canada. If you are the second spouse to die, if you're the last remaining spouse, if you're married or if you're single, if you pass away, your accounts are subject to what is called deemed distribution. So if you have RRSPs or RIF in Canada, that is subject, it's like you take a withdrawal from all of those accounts the day that you pass away. Same thing if you have any US IRA accounts. Those are also subject to deemed distribution. If you have $1 million IRA account and you pass away up in Canada, you're going to be hit with a nearly 50% tax on that IRA account. It's about 49.3% in Ontario. There's other provinces in which that tax would well exceed 50%. This is a huge amount that all of a sudden now your heirs are only receiving about half of what that value of that IRA account was prior to you passing away. If you can do Roth conversions and that money's all in Roth accounts prior to going to Canada, and that now when you pass away, that money can now all pass to your heirs completely tax free. That could save you or your heirs hundreds of thousands of dollars on estate taxes or inheritance taxes. That keeps more money out of your Canadian revenue agency's pockets and puts more money into your heirs' pockets where you want it. Now, not only does doing Roth conversions help on annual taxation and also potential end of life taxation, it also may help with your OAS benefit. And OAS is reduced if your income exceeds a certain threshold if you are a Canadian resident. US residents don't have to worry about this, but Canadian residents do. If your income exceeds about 93,000 Canadian, your OAS benefit starts to get reduced and it's completely eliminated once your income exceeds about $135,000 Canadian. Well, if you have a $1 million IRA account or 401k account and you're withdrawing 4% per year, that's $40,000. That's $54,000 Canadian that you're taking out. If you start to add that to RSP withdrawals, CPP, OAS, Social Security, it's really easy to get that income above 100,000, potentially over 135,000, and have all of that OAS benefit potentially completely eliminated. If we can do Roth conversions, if we can get your income lower in retirement or your taxable income lower in retirement, that may allow you to keep a larger amount of your OAS benefit. Your OAS benefit could be as high as $700 per month Canadian. And if you're losing all of that because your income taxes are too high, Roth conversions before moving back to Canada could mean a significant benefit for you. The other big benefit of doing Roth conversions and where we help a lot of our clients out and or suggest doing Roth conversions is if you're going to be subject to the exit tax upon leaving the US. Now, we have a lot of videos about the exit tax, but kind of just a quick summary. If you are a green card holder, you've been a green card holder for 8 or more years, and you have a worldwide net worth of $2 million or more, you will probably be subject to that exit tax when you give up your green card and move up full time to Canada. And in that case, if you're going to be subject to it, Roth conversions can be a huge benefit for you. Roth conversions can be a big benefit in two ways. So if you're subject to the exit tax and you have an IRA account, that IRA account is deemed to be withdrawn in the year in which you leave the United States. If you have $1 million IRA account, you can imagine how much in taxes you'd have to pay if you took all of that money out all in one year. And that's what the exit tax does to you, unfortunately. So Roth conversions can help in one of two ways. In one way, they can get that IRA account into a Roth IRA account. So even if you have a deemed distribution, that Roth IRA account should be subject to little or no taxation at that point. The other benefit is if you're paying taxes up front, if you're paying taxes now before leaving and going to Canada, that may actually lower your net worth so that you don't have $2 million when you leave. For example, let's say that you're right at a $2 million or just over $2 million net worth, and you'd be subject to the exit tax when you leave the United States. If we can convert a lot of your IRA accounts into Roth IRAs, we might have to pay a lot in taxes right now, but ultimately that would reduce or lower your net worth potentially under that $2 million threshold, and it could completely eliminate that exit tax for you. So there could be significant exit tax ramifications if you do Roth conversions prior to leaving the United States. Again, my name is Brian Haggard. I'm the founder of RetireMitten Financial. We help simplify your cross-border retirement plan. If you're thinking about moving back to Canada, either now or in the future, please reach out to us. You can schedule a complimentary consultation. We can talk to you about what services we provide and how we may be able to help you. Thanks so much for listening today.